Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier retraced from the recent, after hitting the recent low of around the 24,000 psychological level. We are seeing the Dow has pulled back towards the 21,750 points before staging a recovery pattern. And over the near-term period, we are seeing the Dow has been forming the higher low and also the higher high formation as the Dow has recovered to close above the EMA 20 level over the past couple of days. For now, we're going to expect further upside for the Dow Jones to trend back towards the 24,000. Should there be a breach above that, then we might see further recovery on the Dow towards the 25,000 psychological level. The gains over the past couple of days on the Dow Jones Index was mainly spurred by the trade over the optimism over the two-day trade talks between US and China that is going to conclude on today. Similarly, the S&P 500 was traded in a similar manner. It has violated below the 2600 psychological level before heading towards the recent low of 2350. After hitting the 2350, we are seeing the S&P 500 has recovered sharply, forming potentially the higher high and also the higher low formation over the near-term period. It has also recovered above the EMA 20 level as well. For now, let's monitor for the breakout above the 2600. Should the 2600 level were to be breached, further upside will be seen for the S&P 500 to head back towards the 2700. The immediate support will be located towards the previous low of 2450 level for now. Okay, some of these are core prices. The core prices continues to trend higher after sliding towards the recent low of 4250. Subsequently, we are seeing a good breakout above the 4750 level, and the core prices continues to head higher, backed by the optimism over the trade deal between US and also China that could potentially spur demand, coupled with the efforts from OPEC to cut their production. For now, we are expecting further upside for the core prices. Should there be a breakout above the 50 to head towards the firstly the 5250 or even towards the 55 US barrel mark. In the meantime, the 4750 will serve as the immediate support level for now, followed by the 45. Okay, some of it on our local front. The FMKLCI has earlier recovered from the recent low of 1630 level. Since then, we are seeing a window dressing activities on the FMKLCI heading towards the 1700 psychological level before traded just on a sideways manner. But on despite the gains in the Wall Street and also the major Asian stock markets, we are seeing the FMKLCI has formed a gap up formation, and subsequently the key index has given up all these intraday gains to form the bearish engulfing candle yesterday. The weakness was mainly due to the decline in the glove manufacturers like Top Glove and also Hotelega, which pushed about 4 to 5 points pushed the FMKLCI lower by 4 to 5 points yesterday. For now, we are expecting some of just a mild sideways or mild consolidation phase between the 1670 towards the 1700. Until we can see a breakout above the 1700, only we can confirm for the next phase of recovery on the FMKLCI. Should there be a breakout above the 1700, then only we can confirm for the FMKLCI forming the higher low and also the higher high formation. So let's monitor for the breakout above the 1700 level for now. But if the 1670 level fails to hold and the FMKLCI continues to reverse its position beyond that, then we might see further weakness back towards the 1630 level over the longer term period. But all in all, indicators still suggest that FMKLCI is still on the recovery side. As you can see that the MACD indicator is still pointing upwards, whereas the RSI continues to flirt mostly above the 50 level since the mid of December last year. The FM small cap wise, we are seeing a good recovery pattern being formed. On the 19th of December, we did mention this on the Skype group that we are expecting a recovery on the FM small cap index. So for now, we are seeing the FM small cap index has recently gap up and also closed above the EMA 20 level, and the follow-through buy interest was noted on the next day itself. So for the FM small cap index, we might see further recovery on the lower liners to continue to creep higher back towards the 12,200 points level, at least over the near-term period. In the meantime, there could be some of the minor pullback, but the pullback might just be minor before the next recovery to resume. On stocks wise, some of the stocks that can watch out for firstly will be Guangzhou. Guangzhou Berhad has been a very strong uptrend, hit towards the recent high of 3 ringgit and 7 cents a level. Subsequently, price has staged a healthy pullback just towards the EMA 60. The EMA 60 is a very strong support level as earlier we did see a recovery above the EMA 60. Once again, it has hit the EMA 60 or near the EMA 120 before recovering. Once again, after hitting the recent EMA 60 level, we are seeing a good bullish candle was being formed on Guangzhou Berhad yesterday as price closed above the EMA on 20 level, accompanied by some of the high volumes being traded. For Guangzhou right now, we're going to monitor for this potential trend line breakout above yesterday's high of the 2 ringgit and 87 cents level. Should price breach above the 287, we could expect price to head back towards the 307 or even towards the 3 ringgit and 25 cents. Your stop loss will be located towards the recent low, which is currently located at the 2 ringgit and 65 cents or the EMA 60 level on Guangzhou Berhad. With price forming the bullish candle yesterday, we are also seeing that the MACD indicator has already issued the buy signal yesterday, whereas the RSI has also recovered above the 50 level. On our 3A resources, price is still in a downtrend formation, so any recovery from now will be just taken as a technical rebound play. Price has earlier hit the recent low of around the 69 or 70 cents a level. Since then, we are seeing the potential bullish divergence signal. Since price has been trading lower throughout this period of time, but the MACD indicator has been forming the higher low. For now, price has found some of the a healthy recovery after the 31st of December sell-off. We did not see any flow through selling pressure. We did see the 3A has recovered to close above the EMA 60 level, accompanied by some of the improvement in volumes over the past couple of days. So for now, let's monitor for the breakout above the 83 cents. Should price breach above the 83 cents, we could expect price to head towards the 91 or even towards the 98 and a half. Your stop loss will be located towards the 76 cents level, and if you can take further risk, the 70 cents will serve as the final defense on the 3A resources. On Superlon, price is just traded on a sideways manner after continuously rejecting the EMA 120 level. We did see price subsequently a pullback, but during this period of time, we are seeing price has been forming the higher low of formation. So, and recently we are seeing a short-term breakout, pullback, and continuation pattern as price from the on the 31st of December, we are seeing a bullish candle. The next day itself, price subsequently gap down after it has declared a dividend, forming the breakout. This was the breakout. The pullback or just traded on a sideways manner over the past 3 to 4 trading days before staging the continuation pattern as price breached above the 1 ringgit and 20 cents level, accompanied by some of the mild improvement in volumes. With the breakout above the 1 ringgit and 20 cents, the MACD indicator continues to point higher, whereas the RSI has risen above the 50 level. For now, we are expecting price to see a further recovery to head back towards the previous peak of 1 ringgit and 30 or even towards the 1 ringgit and 44 cents level. Your stop loss will be located towards the previous breakout point of 1 ringgit and 15 cents. And if you can take further risk, the final defense will be located towards the 1 ringgit and 12 cents level on Superlon. Last two company for the day will be firstly is Oniwo Group. Oniwo Group is also on the downtrend of formation. Any recovery from now will be just taken as a technical rebound play. Price has found some support along the 46 cents level, forming the hammer candle. Subsequently, we are seeing a good recovery pattern on the Oniwo Group as price breach and a recent above the EMA 20. But the next day, we are seeing a shooting star candle as we did not see any follow through by interest. Price subsequently traded on a sideways manner. But on yesterday itself, we are seeing price has once again breached above the EMA 20 level, accompanied by some of the improvement in volumes being traded over the past 2 days trading period. With the 3 white soldiers candle being formed, we could be monitoring for the next breakout above the 55 cents. Earlier, it did breach above the 55 cents level, but it did not close above that. So let's monitor for the breakout and a closing above the 55 cents. Should price breach above the 55, we could expect price to head higher. Firstly, towards the of 60.5 cents level, followed by the 69.5 cents. Stop loss will be located towards the recent low, which is located at the 49.5 cents level on O'Neill Group. Things appears to be quite positive right now, as you can see that the MACD indicator has been creeping higher, forming the higher high and also the higher low formation. Now RSI has also recovered above the 50 level recently. Last company for the day will be Datasonic. Datasonic has endured a very sharp sell-off, hitting the recent low of around the 30 cents level before staging a recovery towards the recent peak of around the 49 cents. It has hit the 49 cents level on several occasions, but it did not break out above that. So the 49 cents will serve as a very strong resistance level for now. But yesterday, we are seeing some of the this is just a inverted hammer candle, but this could be taken as a positive signs, as you can see that this is just a sideways movement. Sideways movement accompanied by some of the inverted hammer candle. This means that investors are accumulating on this company right now. So for now, let's monitor for the breakout above the 49 cents, or we can trade uh, Datasonic over the short term to head towards the 49 cents. That will be the immediate target price for now. But once the 49 cents level will be breached, further upside will be seen towards the 60 cents level, while your stop loss will be located towards the recent low, which is currently located at the 40 cents level on Datasonic. Things appears to be slightly positive as well, as you can see that the indicator has been forming the higher high and also the higher low formation. MACD histogram has really turned green yesterday as well. If you have any questions, you can put in the chat box and I'll reply you shortly. There's some question here, firstly on Dayang. Okay, Dayang has then rallied towards the recent peak of 73 cents from the after recovering from the 50 cents level. Subsequently, price gave up its previous sessions a rally back towards the 50 cents level and subsequently traded on a sideways manner. So for Dayang right now, given that price has already formed a two-day pullback pattern, let's monitor to see if there's any potential flag formation or breakout right now. Until we can see the price breach and also close above the 57.5 cents, then only you can confirm that price could be heading for a technical rebound back towards the 63 or even towards the 73 cents level. Your stop loss point will be located towards the recent low, which is currently located at the 52.5 cents. And if you can take further risk, the final defense is at the 50 cents level. So for now, there's a 50-50 chance. If price were to continue to pull back below the 52.5 cents, then you could forget about this company, because price could be forming the lower high and also the potentially lower low formation. But if price can recover back above the 57.5 cents level over the near term, then that could be another wave of recovery on Dayang. Okay, for Harta Laga right now, price has again hit the recent peak after after the rally towards the 7 ringgit and 45 cents level. Price subsequently formed a shooting star candle. Price has pulled back and traded on a sideways manner. But over the past 2 trading days, we are seeing a sharp sell-off on glove-related companies like including Harta Laga as well, as price violates below the 6 ringgit psychological level. If the 6 ringgit psychological level fails to hold, price continues to tank lower on the next trading days. On Harta Laga right now, we think that the oversold, the selling pressure might be overdone. That could be some of the bargain hunting activities, at least over the near-term period, to trend back towards the 6 ringgit psychological level. If that were to happen, then you should adopt the selling to strength strategy. Any recovery will be an opportunity for you to lock in your gains or trim your losses, because the price is already forming the lower high and also the lower low formation, suggesting that the downtrend is already intact right now. Any recovery will be an opportunity for you to sell, or else price there's a high chance that price will trend lower. But if price were to recover above the 6 ringgit, it formed a breakout, pull back, and the continuation pattern, then we might see another wave of recovery on the harder liquor. But over the near term, I expect some of the just a mild recovery pattern back towards the 6 ringgit. On Supermax, we are seeing some of the similar pattern being formed after a wave of a recovery towards the recent high of around the 2 ringgit and 5 cents. We are seeing price subsequently a pullback and traded on a sideways manner. So for Supermax right now, if you're holding on to this counter, any pullback below the 1 ringgit and 60 cents level, you have to cut loss or take profit immediately, or else price might be hitting lower towards the 1 ringgit and 41 cents, the 41, 42 cents level. But if price were to recover over the near term period, we might see gains likely to be just limited towards the 1 ringgit and 81 cents until we can see a breakout above the 181. Then only we can confirm for the next wave of recovery on Supermax. So for now, let's monitor to see how it holds above the 160. There's another question here on the Bahat as well. I think Deep Bahat, there's one news article on it over the past like few days. After the continuous downward selling pressure on Deep Bahat towards the 22 cents, we are seeing price has formed the very sharp bullish candle. I think it's mainly due to either a land disposal or development property development project on Deep Bahat. For now, the price has been reacted to that news. It has trended sharply higher, closing above the EMA 120 level. Technical wise, we are also seeing one after a sharp day of rally, we did not see any follow through selling pressure, and instead price continues to head higher. For now, we could expect price to continue to trend higher towards the first target price at the 50 cents level, or even towards the 55 cents. Your stop loss will be located towards the recent low of 35 cents level on Deep Bahat. This company is really quite overbought right now. We think that gains might be just limited towards the 50 cents. If you look at the 30 minutes chart, just give me a minute for the chart to load. If you look at the 30 minutes chart, we are seeing the first wave of a rally. Price subsequently staged a healthy pullback just towards the EMA 20 level and trading on a sideways manner. Another bar of rally. For now, we could expect gains likely to be just limited towards the 50 cents level, because if price continues to rally towards the 50 cents, the MACD indicator might be trading just towards here, and this could be the potential bearish divergence signal over the near term period. So we might see just gains likely to be just kept towards the 50 cents over the near term. If there's no further question for today, then we end the morning briefing. Thank you.